All right, welcome back, investors, to Ticker Time News. I'm Adam, and here we are for a quick take on the markets. And it wasn't a good day. The major indices dropped more than 2.5% on Friday in what was a largely continuation of yesterday's broad-based sell-off. And before I go any further in this quick take on the markets, just a quick reminder: you are the most important person out there watching this video. You are. And I greatly appreciate you watching. I greatly appreciate everyone who watches. If you have a question, leave the ticker symbol in your question in the comments. We'll go over it live during the quick take, or we'll make a separate video on it. Doing some research on some other tickers that have been brought up in comments before recently. So you're always welcome to ask your question, whatever it may be about the markets, and we'll do our best to research and answer that question for you. So before I go any further, just wanted to share that with you. Okay, I know it was a tough day in the market. One thing I used to say when doing these aftermarket live streams instead of quick takes like this is take a deep breath. Everything's okay. The markets go up, they go down, they oscillate, they seesaw, they bounce around, they move around, just like breathing, right? Sometimes you take a deep breath, right? That's when the markets go down really far, like they did today. Sometimes they go up and it's a shallow breath of excitement, or even a deep breath to say, yeah, but deep breath, that's it. That's all you can do. And make sure you're trying to do the best to be a better investor. That's all there really is to it. Okay, so with today, it was definitely a continuation from yesterday. It was almost like this was a technical thing that happened in the market. And of course, there were some external pressures on the market. A slowing economy is showing more and more to be the case. I believe it is definitely the case. I don't think the economy is growing right now. I think the economy is slowing. It's like when you blow up a balloon and the balloon almost gets to full size, right? And there's just a couple little breath left that you can put into the balloon. That's where we're at with the economy right now. We're at that last couple of breaths before the balloon either starts to stabilize and be really, really big, or the air slowly starts to come out of it, or we get a big pop. Either or, right? Those things can happen to a balloon. So again, just like breathing, take a deep breath. So off of yesterday's big continuation, that's what I think we had today. Now the S&P 500, it dropped 2.8% today. And the Dow Jones, it fell 2.8%. It was the worst decline of the year for the Dow Jones. The Nasdaq fell 2.6%, and the Russell 2000 fell 2.6%. All of the 11 S&P 500 sectors, they closed lower, with losses ranging from 1.6% in the consumer staples to a loss of 3.7% in materials. And all 30 Dow Jones components, every stock, all 30 stocks in the Dow Jones ended lower today. It's definitely a broad-based risk-off sell-off in the market today, and it's like nobody wanted to hold stocks. I'm exaggerating a little bit there. Not exactly everybody, but not a lot of traders wanted to hold stocks over the weekend. So what could be coming up this weekend to spook investors like that? Today's Earth Day. Happy Earth Day, by the way. But I don't think there's anything major happening this weekend that couldn't have happened last weekend or next weekend. But it was just that mindset in the markets today. And there was no difference between growth stocks and value stocks today. Both fell. There was no discrimination in the market whatsoever today because everything just fell together. And sometimes we can tell a big difference between mega caps and micro caps. One does better one day, one does better the next day. But today, everything uniform down. De-risking efforts persisted amid a weakening technical posture. And of course, we got the rate hikes anxiety that's out there. in the face of a slower economy, right? Slower growth. The S&P 500 fell further below its descending, and that's key right there, descending 50-day moving average. I'm going to take volume off. I'm going to hide that for a moment so we can go in a little bit tighter here. This is the daily chart for the S&P 500. I always start and look at this because it's the broadest, right? There's 500 stocks in there. The 50-day moving average, it's this aqua blue line. And since the 8th of April, it's been declining. And then, of course, from the 20th to the 22nd, it's been declining sharper. Obviously, we just had 2 big days of red. Today, a big one. And yesterday, maybe today would be huge. Yesterday was big. How about that? But it's declining. The 50-day moving average, it's declining. It's descending. It's going down. And that's obviously not a good look for the market and the technical picture of the market. I mean, if we go back and look at when the 50-day moving average was falling on the S&P 500, I mean, we can pick a whole bunch of sections over the past several a couple months here, a few months here, and we can go to February 18th all the way down to the bottom of March the 28th. So, I mean, it can decline and it can go far for a long time. At this point, I'm starting to think that we're going to retest this, the lows that we had back here on February the 24th in the market. The lows certainly on March 8th and on March the 14th, which March the 14th was the turnaround to our snapback rally. Now, we are not in a death cross right now. We're not even close to one. The 200-day moving average, that's all the way up at 44.96. We're at 42.71, so we're nowhere near that. And the 50-day moving average is at 44.06. So we are below that big time right now. So it's not a good technical structure. I think investors were reminded of the slower growth prospects by the decline in the preliminary IHS market services, or PMI, for April. It went to 54.7 from 58 in March. That was a big decline. And a reduced 2022 growth forecast for Germany, which went to 2.2% from 3.6%. So a big drop there, over a full percentage point. Now, the Fed funds sensitive 2-year, let's look at that together. Remember, we can do this together with the charts. There is a link in the description for a free account to TradingView. Check it out if you have some time. The ticker symbol for the 2-year yield is US02Y. You want to look at that. You can see the 2-year here. It did increase 3 basis points to 2.72%. In the after hours, it has pulled back some. It's at 2.673 right this very moment. Now, the growth sensitive, now the 2-year, it's sensitive to the Fed funds rate, but the 10-year is sensitive to growth. And looking at the 10-year, US10Y, enter for the 10-year. The 10-year decreased 1 basis points to 2.91 after hitting 2.97% Thursday evening, right? And it's down just a little bit further, down to 2.903 at this very moment in time. WTI crude oil futures, that fell 1.7% today to $102 a barrel. You can look at that too. Just type in WTI crude in TradingView, and you can pull that right up. Now, in addition, investors were left underwhelmed by the latest earnings reports from the likes of Verizon, ticker symbol VZ. They were down 5.6% today. Look at that. on this chart. Horrible decline. Down even almost 0.2% in after hours. Not a very pleasant earnings report. Now, if we look here, they beat on EPS barely. I would call this in line. Estimate was $1.34. They came in at $1.35. They missed on revenue, not by much, 60.7 million dollars. The estimate was 33.615 billion, and they came in with 33.554 billion. So not a big miss there on volume. Slipped my mind. When we're live, there's always something that goes wrong. I always slip up on a word or forget something. But that's a slight miss there on revenue and just in line with EPS. Other ones that didn't do good, American Express, they were down 2.8%. HCA Healthcare, they dropped big. Ticker symbol is HCA. Wait till you see this. No, did we get the right one? Yep, we did. Look at this big red candle. And no, volume's not on the screen right now. They were down 21.8%. Look at this earnings. And this is in the healthcare sector. This is supposed to be a defensive area for the market. Missed by 13 cents on EPS, or 3%. And then they beat on revenue by 225.2 million, or 1.53%. But look at that. The estimated EPS was $4.25. They came in at $4.12. Not looking real sharp there. And of course, they paid for it big time. 21.8% decline. You can call it a 22% decline if you add in after hours. It's getting down to that $200 level, which is an area that has many reactions. Back here in May, June of 2021, July of 2021, it acted as resistance and then flipped to support. Then it's been up here in a higher range. But again, this is healthcare, right? Healthcare is supposed to be defensive, not here. Also, Intuitive Surgical. The ticker symbol is ISRG. Again, healthcare, not down 22%, but down 14.3%, and down another 0.32% in the after hours. Now, look at the results here. Well, they had a surprise of 5 cents on EPS, up 4.8%. And they beat revenue by 62 million, or 4.3%. But you go and look at the guidance, it's not looking very good. So these were some examples of stocks that did poorly for earnings. Now, to flip the card on this, three earnings standouts to shed some positive light in the market. Kimberly-Clark was one of them. They were up over 8%. KMB for Kimberly-Clark, up over 8%. What they finished? 8.13% on the day. And look at where the stock was here, and then shot up all the way up here, way up there. And look at here for earnings. Now, this is a 9% beat on EPS, 3.6% beat in revenue, and they're looking good going forward. So that's Kimberly-Clark. Also, SVB Financial, SIVB is the ticker symbol. They also did good with earnings. So a couple of standouts there, 7.53% they were up today. Another standout for earnings. And this is a regional bank. And since the beginning of the year, I've been more focused in the banking sector on regional banks than on, your big names like Bank of America, Morgan Stanley, all your big ones, right? JP Morgan. I think the regional banks will do better this year than the big banks, even though, I mean, look at this year to date. Where's SVB for year to date? They're going to be in the red, down 20.2%. So they haven't even come close to beating the market for the year, right? So that's one that did pretty good with earnings today. So it wasn't all negative in the markets today. Now, for what it's worth, Cleveland Fed President Mester, which is an FOMC voter, told CNBC that the Fed does not need to raise rates by 75 basis points and that she prefers to get rates to 2.5% by the end of the year. So, again, take it for what it's worth. There's been a lot of comments the past couple of days from Fed presidents, some FOMC member voters, some not, and one retiring who's supposed to be a voter for next year. So that put some turmoil into, well, who could it be, a hawk or a dove to take that voting spot for next year? So just a lot of moving parts in the market right now, most of them negative, but yeah, a couple highlights there. Another negative was Snap, right? SNAP is the ticker symbol. Snap reported their earnings, and Q1 earnings wasn't very good. It wasn't, when I say it wasn't very good, more like it was more like a who was that gymnast in the Olympics player with the like the look? I don't remember how she did it, and I can't do it. But yeah, investors just didn't seem very enthused with this. Now, the earnings were decent. They weren't too bad. But I don't think investors like them very much. You can pull it up here and look. A miss on both EPS and on revenue. They missed by 5 cents on EPS, down 28.5% there. And revenue was pretty much in line. When you're doing $1 billion, 7 million, it's not that much. I mean, it's just over 0.5% when you look at it that way. Also, their DAUs grew, and DAUs are daily active users. They grew by 18% for the quarter. I'm sorry, for the year, excuse me, 18% year over year. They also guided their Q2 revenues below estimates, so they also see slower growth ahead. With the stock having given up over 30% on the year and 60% from their all-time highs reached last September, the price action in the stock, I think, is evidence that investors were not overly impressed with Snap's Q1 results. You know, being up 1.6% isn't a huge move, and being down 4.3% yesterday. So, yeah, investors just, I don't think, liked it very much. But they are getting to this low here, which is like this triple bottom. First reached back here in January the 27th, and then reached on March the 14th, which is a big day for the market overall. And then here on April the 22nd today, getting down to that low. So that's an interesting area with the entire market broad sell-off today. It being up 1.1% is, not that bad. Okay, Bed Bath and Beyond, ticker symbol BBBY, triple B's and a Y. There was some crazy things happening with them. They ended the day up 6.85%. I'm going to go to the 5-minute chart here because this really displays what happened today. All right, so here we go. I'm going to put volume back on here so we can see a little better. This is the 5-minute chart. So each candle represents 5 minutes. Right here at 3:30 p.m. Eastern. the stock jumped nearly 11%. Really? Bed Bath & Beyond had this crazy end of the day, right? And you can see it here on the chart. It really sums it up on this 5-minute chart. Trading was halted on this volatility after the Wall Street Journal suggested that the BBBY brand, which is part of Bed Bath & Beyond, has drawn buyer interest. Remember, back at the beginning of March, we did a video when RC Ventures, which is Ryan Cohen's fund, bought a nearly 10% stake in the company to help make changes. Yeah, well, RC Ventures, their concerns at the time were that Bed Bath & Beyond is overpaying executives and failing to reverse market share loss. And it wanted the retailer to narrow its focus to improve its operations and inventory mix. The firm also wants Bed Bath & Beyond to undergo a review of strategic alternatives, which could lead to a sale of the whole company or perhaps to a spin-off of its better performing buybuy BABY segment, or maybe here a sell of it. So it looks like progress is being made with Bed Bath & Beyond and RC Ventures in their request. So just a bit of news and bam, this thing shot up nearly 11%. Now, it ended up flip-flopping, big volatility. The next 5 minutes after that 11% pop, down 4.1%, then up 5.9%, then down 2.6%. Big moves, big moves on this. Trading halted, but it ended the day up 6.85%. Now, a lot of people piling in here. We're definitely trying to just day trade this, get in, hold it for the last, 10, 15 minutes of the day, and then sell it right before close. Yeah, they made a quick turnaround there. Really quick turnaround. There was also some crazy options trading that occurred with Bed Bath & Beyond. There were 16 and $17 calls, because before this happened, right, it was trading right before the big 11% pop. It was trading a high of 16.22, a low of 16.17. So right in between there was a big uptick in calls for $17 strike price right before the news broke. 0 day for expiring. Somebody knew something. Somebody knew something before the news broke, and play some options calls to make a quick buck or two. So I find that interesting. You can search Twitter for it. Go find it. Unusual Whales. Shout out to them on Twitter. They posted that information about the crazy options trading going on. So yeah. All right, everyone. Keeping it short. At least I hope I am. Over 20 minutes. That's not keeping it short. I went on a little too long today. Apologize for that. It is Friday. I should have been a little neater and cleaner with it and keeping it short. But we got some videos about Netflix, about Tesla, their earnings, also Abbott Labs. So those 3 videos will be the next 3 coming out over the next this evening, and then tomorrow over the weekend. So watch for those 3. If you could, it would be a great honor to have you with us, joining us to beat this crazy market by clicking the first link in the description or the link in the live chat. That also helps out the channel greatly. It allows us to be here, to do the research, to share this information with you. And you can also help us out by smashing that like button and then sharing this video wherever you can. Those are 2 things that can help out, and of course, helping us grow, helping us put this information together to help us all become better investors and help us all to reach financial freedom. Clicking that first link in the description or the link in the live chat. I greatly appreciate it. All right, ladies and gentlemen, I hope you have a wonderful weekend, and we'll do this all again after the market closes on Monday. Okay, have a great weekend, and I'll see you in the next video.